Here's a detailed summary of Alibaba Group's BBA 2025 Q2 earnings call transcript. Overall financial performance. September quarter 2024 consolidated revenue increased by 5% year-over-year to 236.5 billion renminbi. Consolidated adjusted EBITDA decreased by 5% to 40.6 billion renminbi, primarily due to increased investments in e-commerce businesses. Non-GAAP net income decreased by 9% to 36.5 billion renminbi. GAAP net income increased by 63% to 43.5 billion renminbi, largely due to favorable changes in equity investments and investment impairments. Net cash position remained strong at 352.1 billion renminbi, approximately $50.2 billion, as of September 30, 2024. Free cash flow decreased by 70% to 13.7 billion renminbi, mainly attributed to investments in Alibaba cloud infrastructure, merchant refunds, and changes in working capital. Key segment performance. Taobao and Tmall Group revenue increased by 1% to 99 billion renminbi. China commerce retail revenue 93 billion renminbi, up 1% year-over-year. Customer management revenue grew 2% with stable take rates. Direct sales and other revenue decreased by 5% to 22.6 billion renminbi. China commerce wholesale revenue increased by 18% to 6 billion renminbi. Adjusted EBITDA decreased by 5% to 44.6 billion renminbi due to increased investments in user experience, partly offset by customer management revenue growth. Cloud Intelligence Group revenue increased by 7% to 29.6 billion renminbi, excluding consolidated subsidiaries. Growth was also 7%. AI-related product revenue grew at triple-digit rates year-over-year for the fifth consecutive quarter and is increasing its share in public cloud revenue. Adjusted EBITDA increased by 89% to 2.7 billion renminbi, with an improved margin of 9%, up 4 percentage points. This was driven by a shift to high-margin public cloud products, including AI, and improved operating efficiency, partially offset by customer growth and technology investments. Alibaba International Digital Commerce Group (AIDC) revenue grew by 29% to 31.7 billion renminbi, driven by strong cross-border business, particularly AliExpress Choice. International commerce retail revenue increased by 35% to 25.6 billion renminbi. International commerce wholesale revenue increased by 9% to 6.1 billion renminbi. Adjusted EBITDA reported a loss of 2.9 billion renminbi, compared to a loss of 384 million renminbi last year, primarily due to increased investments in cross-border businesses. Lazada, however, significantly reduced its operating loss. Cainiao revenue increased by 8% to 24.6 billion renminbi, primarily from cross-border fulfillment solutions. Adjusted EBITDA decreased by 94% to 55 million renminbi due to increased investment in cross-border fulfillment solutions. Local Services Group revenue grew by 14%, driven by order growth for AMAP and ELE.me, and marketing services revenue. Losses narrowed significantly due to improved operating efficiency and scale. Digital Media Entertainment Group revenue 5.7 billion renminbi. Losses narrowed, with Youku reducing operating loss through increased advertising revenue and improved content investment efficiency. Highlights and key strategic initiatives. User-first, AI-driven strategy. Management reiterated their commitment to this strategy, focusing on user experience and leveraging AI. Taobao and Tmall user growth. Monthly active consumers reached an all-time high. Purchase frequency is a key driver of GMV growth. 88 VIP members grew to 46 million. Monetization progress. Implementation of a 0.6% software service fee on completed GMV for Taobao and Tmall, with rebates for SME merchants. Increased merchant adoption of marketing tools, like Alibaba's constitute. Double 11 performance. Taobao and Tmall achieved robust GMV growth during the festival, with merchant feedback exceeding expectations. Cloud and AI investment. Continued significant investment in AI infrastructure to meet growing demand for AI-driven cloud services. AI-related product revenue demonstrating triple-digit growth. International e-commerce expansion. AIDC achieved strong revenue growth, with AliExpress Choice and Trendio driving performance. Focus on optimizing mix and operational efficiency in key markets. Operational efficiency. Progress made in narrowing losses for segments like local services and digital media entertainment. Share buybacks. Repurchased shares totaling $4.1 billion in the quarter, bringing the total to approximately $10 billion for the first half of fiscal year 2025, achieving a 4.4% net reduction in share count. A $22 billion authorization remains. Shareholder value. Proactive management of ESOP dilution by shifting to cash incentives. Hong Kong listing and Southbound Stock Connect. Primary listing completed in Hong Kong, followed by inclusion in Southbound Stock Connect, which saw significant investor inflows from mainland China. Interoperability with WeChat Pay. Management expressed high expectations for acquiring new users and driving incremental GMV through this partnership. Government stimulus. Optimism regarding the positive long-term impact of government macro stimulus policies and trade-in programs on consumption. Lowlights. Decreased adjusted EBITDA and net income. Consolidated adjusted EBITDA and non-GAAP net income saw a decline due to increased investments. Reduced free cash flow. A significant decrease in free cash flow was primarily due to substantial investments in Alibaba cloud infrastructure. Increased AIDC loss. AIDC reported a wider operating loss due to increased investments in growth markets. Cainiao EBITDA decline. Cainiao's adjusted EBITDA saw a significant drop due to investments in cross-border fulfillment. Management commentary. Eddie Wu, chairman, emphasized the steady growth of core businesses guided by a user-first, AI-driven strategy. Highlighted the record-high monthly active consumers on Taobao and Tmall, and the success of Double 11, exceeding expectations. Expressed optimism about government stimulus policies positively impacting consumption. Stressed continued investment in core user groups, new users, and product categories for sustainable growth. Viewed the Gen AI opportunity as historic and a driver for future technological leapfrogging. For Taobao and Tmall, articulated a strategy of investing in strengthening competencies, user experience, and the merchant side, including supply diversification and AI technology. Believes interoperability with WeChat Pay will be a significant driver for new user acquisition and medium to long-term growth. Toby Su, Chief Financial Officer, confirmed stable take rates due to the 0.6% software service fee and increased adoption of marketing tools, offset by growth in low monetization new business models. Reiterated commitment to investing in AI infrastructure for both short-term demand and long-term Gen AI opportunity. Detailed the significant share buyback program, totaling $10 billion in the first half of the fiscal year, and its impact on reducing share count. Addressed the primary buyback execution on the U.S. line due to liquidity. Highlighted the importance of merchant rights and interests, emphasizing a balanced approach to take rates and a merchant-friendly environment. Confirmed significant growth acceleration in categories impacted by trade and subsidies. Believes cloud's technology advantage and scale effect are improving profitability, with token price reductions for APIs being an investment in user acquisition and ecosystem growth. Future forecasts and outlook. Taobao and Tmall EBITDA, expected to fluctuate in the coming quarters due to ongoing investments in user experience and technology. Cloud business, expected to continue to invest in AI-related cloud infrastructure to capture increasing adoption for AI and maintain market leadership. Management anticipates continued double-digit growth and improving profitability in the cloud segment. AIDC will continue to invest in key growth markets for strategic expansion while enhancing operational efficiency in markets with a line of sight to profitability. Other businesses, expected to improve operating efficiency and move towards sustainable growth and profitability, with some achieving profitability sooner and others break even within 1 to 2 years. Significant risk factors, intensifying e-commerce competition. Management acknowledged the competitive landscape. Investment for growth, significant investments in core businesses, AI infrastructure, and international expansion could impact short-term profitability and free cash flow. Monetization of new business models. Growing new business models with lower monetization rates will offset increases in take rates from established services. Macroeconomic conditions. While optimistic about government stimulus, broader economic fluctuations could still impact consumption. Regulatory environment. Although not explicitly detailed in this excerpt, regulatory changes in China remain a general risk factor for technology companies. In summary, Alibaba's 2025 Q2 demonstrated steady revenue growth, with strong performance in international commerce and a significant increase in AI-related cloud revenue. The company is navigating a period of substantial investment in AI and user experience for its core e-commerce business, which is impacting short-term profitability and free cash flow. Management remains optimistic about future growth drivers, including AI adoption, government stimulus, and strategic partnerships like WeChat Pay interoperability. The company is also actively returning capital to shareholders through an aggressive share buyback program.